Let's get started discussing Bollinger Bands, one of the most reliable technical indicators and most well-known and used in the marketplace. Now, in tonight's class, I'm going to use the term security when referring to any tradable financial instrument. This includes stocks, bonds, commodities, futures, indices, mutual funds, options, CFDs, and of course, cryptocurrency. Now, while I may imply a specific investment product, like I may say shares, or I may give an example of the euro, I am talking about all tradable financial instruments because Bollinger Bands works great on any financial chart for any liquid instrument. Similarly, I intermix the terms investing and trading. Now, Bollinger Bands works best when used for traders, but it also can be used in long-term investing. But typically an investor takes a long-term position while a trader takes a much shorter-term position. And because we're all here tonight for this class, we know that it is about short-term trading. Now also, so understand tonight that what we're talking about in generality is CFD and Forex market, but all of these ideas can flow over to all instruments and all markets and all types of investing strategies. Now, Bollinger Bands was created by legendary money manager John Bollinger. And Bollinger Bands are one of the most popular indicators applied by traders throughout the world in nearly all markets. It's rare today to see a chart that doesn't have Bollinger Bands that you can automatically drop on it. Now, one of the nicest things about Bollinger Bands is even though it was developed 30 years ago or more, John Bollinger is still active in the market. And to learn about Bollinger Bands, you can learn it directly from the horse's mouth by going to www.bollingerbands.com. Now, there is an abundance of information published on how to trade with Bollinger Bands. Much of it, though, is discretionary in theory. And how to use Bollinger Bands information usually pushes it back to the trader to interpret what the security price is doing relevant to the bands. Now, when these bands were developed, they were developed to see the top or the high price and the low price of an asset. Now, remember, technical analysis isn't just about making profit. Every indicator does something differently. So Bollinger Bands can be applied to all financial markets, including equities, Forex, commodities, and futures. Bollinger Bands can be used in most time frames from very short time periods to hourly, daily, weekly, or monthly. Bollinger Bands answers one question, or two questions basically, the same. Are prices high or low on a relative basis? By definition, price is high when it hits the upper band of the Bollinger Bands, and price is low at the lower band. Now, that tiny bit of information is incredibly valuable. And it's even a more powerful tool when combined with other tools and indicators such as support and resistance, MACD, RSI stochastics, or just simply support and resistance levels. Now, Bollinger Bands are a technical analysis tool. Specifically, they are a type of trading band or envelope. Trading bands or envelopes serve the same purpose. They provide relative definition of high and low. So let's go over and take a look at a real chart with Bollinger Bands on there. And hold on, I got one set up for us here. And what we see with this Bollinger Band, which is the band that's dropped over charts, is we have an upper band and a lower band and a basis line, which is a moving average. So prices are said to be high when they are near the upper band. Prices are said to be low when they're near the lower band. And this is an envelope or a trading band that encompasses price. Okay. And this is what we're looking at is called a Bollinger Band. Now, the thing is, the design of the band, what you see, sometimes they look like snakes. Sometimes they look like monsters. Sometimes they look like aliens. Doesn't tell you anything. Now, the width of the band tells you that the market is either in contraction or volatile. A volatile market, the bands get wider. And when the market is contracting, the bands are narrower. But that's all that you get out of the shape of the bands. But don't worry about it. It's said that everything you need to trade is contained within these bands. And we're going to discuss that tonight. But first, we want to look at what a Bollinger Band looks like so that you're familiar with it. So this is what the band looks like. Now, it starts out, let me get some of this off our screen. It starts out with what's called a basis band, which is simply a moving average. And Bollinger Band's standard format, developed by Bollinger, starts with a 20-period moving average and then uses a 2-period standard deviation. So this band, the red band we see on the chart right now, that's where it starts. It's a 20-day or 20-period moving average. Then we put on the upper and the lower band. And these bands are what's called 2 standard deviations. And we're going to talk about what standard deviation is in a second. But this is 2 standard deviations above and 2 standard deviations below the moving average or the basis line. Now, we finally just fill in the background because we're not really even concerned with what's going on in the center of the band. What we're concerned about is the upper band and the lower band and how price is interacting with those bands. We're not even concerned much with the moving average, except it gives us a basis of making a decision. So this is what we have when we put Bollinger Bands on a chart. And don't worry about it. All you have to do to put it on your chart is go to indicators, locate Bollinger Bands, click on it, and it'll drop it on your chart. All of this other stuff is just because I've been trying to explain it to you. So let's go back to my presentation, and we'll talk about these in a little bit more detail. So bands are usually thought of as employing a measure of central tendency, such as as a base, such as a moving average. Whereas envelopes encompass the price structure without a clearly defined central focus, perhaps by referencing the highs and the lows. We'll use the term trading bands to refer to any set of curves that market technicians use to define high and low on a relative value. So we have a band. Now, like I said, the upper and the lower bands are based on what's called standard deviation. Standard deviation was not a term or is not a mathematical formula that was developed for the financial market. Standard deviation is a standard mathematical formula used in all types of statistical analysis. Now, interesting, in the real world, no statistician would ever calculate standard deviation by hand. The calculation involves a somewhat complex, and the risk of making a mistake is high. So even statisticians, so you're using it in all their computations and spreadsheets, use a computer to crunch these numbers. But standard deviation, okay, to explain it in its basic form, is a measure of dispersion of a set of data from its mean, or it's a compilation of price points from the moving average. It is calculated as the square root of variance by determining the variation between each data point relative to the mean, or each price relative to the moving average. If the data points are farther from the mean, there is a higher deviation within that data set. So in other words, if price is higher than the average, we have a higher deviation. In finance, standard deviation is a statistical measurement. In its simplest form, the mean, which we keep talking about in the definition of standard deviation, is just the average of the data points in a given set, or what we use in finance, a moving average. So investing, for example, you might want to know the mean closing price for the last 20 days. Or what do we call it? We call it a 20-day moving average. So this can be obtained by taking the closing prices for each session over the last 20 days and dividing it by 20. Because the markets are fickle at best, traders and analysts use moving averages that adjust daily or by each time frame to incorporate the most up-to-date data. This means the calculation is always taking into account the most recent session's movements, and the older sessions drop off as they become less relevant. So standard deviation is calculated based on the moving average. The distance of each data point from the moving average is squared, summed, and averaged to find its variance. Now that's a mouthful, isn't it? Or to put it another way, variance is derived by taking the average of the data points, subtracting the average of each data point individually, squaring each of those results, and then taking another mean or another average of those squared. Or standard deviation is simply the square root of the variance. Okay, we got that out of the way now, don't we? Okay, we don't need to talk about what standard deviation is ever again. Fortunately, I do every time I have to take a class, but we can put it under our belt that it is a statistical, mathematical formula to find the variance between the points or prices on a chart. Now, once we have this down, to build a Bollinger Band, we simply take the base, which is the middle band, is a 20-period base, which is a 20-period standard moving average. We then have the upper band, which we have to put on our charts, and it's spread above the moving average by a volatility measure known as standard deviation. The default for Bollinger Bands is 2 standard deviations, or 2 times standard deviation. And the lower band, which is the middle band less the lower band, is the same volatility measure. So we have an upper band, a lower band, and a base band, which is the same as we saw on this chart right here. Okay. We have the upper band, the lower band, which are the dark green bands, and then we have the moving average, or the 20-period mean, and that's in the red band. That's it. Now you know everything there is to know about how Bollinger Bands is calculated and placed on a chart. Okay. So when you hear people talking about standard deviation, because there's a lot of literature, a lot of gurus that will preach you a system where they've adjusted the standard deviation, because you can change it to be your own by just simply changing standard deviation. And I sometimes use a 2.5 only because I want the best signals possible. And by extending out the standard deviation, I get less signals, but I get better signals. But once you do this, and once you change everything from Bollinger Bands standard 2 and 20, you then have to test it, because none of the literature and none of the rules you read will fit that, because it's no longer based on John Bollinger's calculation. It's based on Barry's calculation, or Bill's calculation, or Arnold's calculation. So remember that anytime you want to customize an indicator, that is up to you to do all the testing, because the rules no longer apply. So now we have it on our charts. What can we do with this? That's the question about all indicators. So let's talk about this. Bollinger Bands has three primary uses. It gives us pattern recognition, which we can see double tops, head and shoulders, and double bottoms, or the most well-known is the W and the M formation. It gives us reversal signals by identifying early warning signs of reversals, and it does trend analysis because it'll detect whether the trend is continuing or at its conclusion. So let's talk about the simplest way of using Bollinger Bands, and that is in pattern recognition. Oh, hold on a second. For some reason, my screen is stuck. There we go. Okay, and that is in pattern recognition. So Bollinger Bands are said to make M's and W's. Of course, an M is an upside down W, or a W is an upside down M. So the rules apply. It's just whether you're coming off of a downtrend and moving to an uptrend, or if you're coming in the reverse. Now, what we see here is the formation of what's called a W. Now, a W or an M takes quite some time to develop. So it's not something you have to freak out and rush to, because what's going to happen is price is going to fall down. And if you draw a line across the price, or the close or the top, whichever you prefer, of the candlesticks, okay, it's going to come down and make a bottom. It's going to bounce off that bottom and move up to form a lower high, come back down to form another bottom, which is the equal distance from the previous bottom. And when it starts, this is called the N formation. There's a right side up and an upside down N, because it depends on whether you're looking at a W or an M formation. Once it has formed the N, which is these three legs, okay, and bounces off of that equal distance bottom, you then start getting a trading signal, because it's now formed a double bottom and is completing the W formation. When price breaks that moving average band, that is a buy signal. And you should be able to ride that wave up to equidistance from the prior wave when it started forming the M. Now, the same holds true in the opposite direction. You know, for whatever we have starting in a downtrend, we also have the same starting in an uptrend. So here we form double tops. And at this point, either case, until it forms the second top or the second bottom and bounces off of it and then crosses that moving average, you don't have to do anything. You don't even have to notice it. And like I said, it takes a lot of time for this formation. Even if you're using a 5-minute chart, it takes all of those candles. Now, it doesn't have to be a wide M or a narrow M. It can be very short M, but it still has to make the up, the down, the up, the down, the up, the down. So it's going to take a while. So you don't have to really realize anything until the N formation is completed. So once we've seen the second peak of the M is formed by the asset price action, it's time to establish a bearish position or a bullish position, depending on whether it's an upside down or right side up and moving. Now, we highly recommend combining the Bollinger Band with the RSI indicator because it's a perfect match. There are two types of tops that we need to know about for Bollinger Bands. And Bollinger Bands is very important when it runs with the trend. And we have tops, which when you have the band on your charts, let's go over to the chart again. We have tops that what we call ride the band. Okay. And then we have tops that have bounced off that band and the prices tried to make a new top or new high and bounce off of that upper band, unable to reach that upper band. Now, this is known as riding the band. But the two tops are when it stays up the band or it tries to reach the band, is unable to violate that band and then bounces off. And the reverse is exactly true for the lower band. Just flip everything upside down. So after a trend move, price fails to reach the outer band as the uptrend becomes weaker. This signal is usually accompanied by an RSI divergence or a continuation signal. During consolidation, price spikes into the outer Bollinger Band, which gets rejected immediately, and this is a reversal signal into the short direction or the reverse. Now we're going to look at this in actual live action in a minute. So during trends, the moving average holds very accurately, and a break above that moving average is usually a meaningful signal that the sentiment has shifted. Now, in the screenshot we're going to look at, it's going to show very nicely how price trended between the outer band and the moving average, both on the way up and the way down. Furthermore, the moving average can be used as a trade exit signal where a trader does not close his existing position unless price has broken the moving average. So in other words, here we can see price bounce off the bands, okay, and move up. Now it's staying above the price. It's riding the bands to stay above the moving average. Here it starts riding the bands. It eases back down to those bands, pushes back up to the upper band, gets rejected, comes back and tries a second time to reach the upper bands, can't, gets rejected. At this point, when it breaks that moving average band, it's giving you a sell signal. Coming down, we ride it exactly the same. We're riding the bands down. We see prices push down to the band, bounces back up, isn't able to break through that moving average, comes back down and rides that band all the way down because we can see we have no break above that moving average, and it's riding on that band. And we're going to look for some point where that band gets rejected off of that lower band and breaks above the moving average, and that's going to tell us that that downtrend has ended. Now, this is a lot to digest. So tonight I've prepared a couple of presentations I'm going to share with you, but there's also two handouts. Okay, and if you see them on your screen, click on the little download button and download them now because you can't get these in a recorded version. And I've put together the what's and how's of Bollinger Bands, and I've used these charts and other charts and written it all out for you to understand each one of these different types of interpretations. So please download those now. Now, I'm also going to show you now or share with you a short presentation on how to interpret these bands and move them into your trading. And if you want to see that the little presentation I'm sharing with you again, I just popped the link up on your screen. You can see it at this link and just look under Bollinger Bands on the playlist. So let's take a look at how you might incorporate Bollinger Bands and use these bands for your trade setups, your entry points, and your stop losses. Now, you might have to turn up your volume a little. Sometimes the recorded version from these presentations, the volume is not so good. So just be aware of that. So as you can see, Bollinger Bands are exceptionally helpful in determining when an asset is overshot to the upside or the downside. And it's important to use the bands also to set risk conditions, not just entry points. Additionally, risk and reward should be set based on the width of the bands or the volatility, with narrower risk reward during low volatility and higher risk reward during high volatility. Because just because the bands will help you figure out where you should place your stop loss, you have to use your risk management to see if you can afford to make that trade, if you can afford to set that stop loss at the appropriate point. If your money management and risk management tools say you cannot afford to make that trade, just because you get it in the band doesn't make you shouldn't use that trade. You should always use your risk and reward ratios and be aware of this is what you need to do to make a final determination of whether you should actually make that trade or not. Now, if you want to watch that presentation, again, I put that link up for you so that you can watch that independently. So we did talk about trend trading with the Bollinger Bands. And remember, there are a few things you need to pay attention to when it comes to using Bollinger Bands to analyze trend strength. During strong trends, price stays close to the outer band. If the price pulls away from the outer band as the trend continues, it shows fading momentum. Repeated pushes into the outer band that don't actually reach the band and show lack of power. A break above the moving average is often a signal that the trend is ending. So on this little screenshot here, we can see a whole entire story of the price action using Bollinger Bands. So if we look here, we can see in here one, price was moving in a downtrend, riding that band strongly. Gave us a very beautiful, let me just get my marker on here. Uh-oh, I lost my markers. Hold on a second. I got them now. Flip to the other side. Here we got a beautiful sell signal as price moved from consolidation, broke the moving average, and started riding down that band. We could have gotten a beautiful sell. And we saw price get rejected from the lower band, tried to reach that lower band again and get rejected again, telling us that that trend was in trouble. We then saw price move and rally above the moving average. We saw these candles soar up, but they weren't able to reach that upper band, but we were above the moving average, telling us we should be moving into a very strong uptrend. And we see price move into that uptrend. Here we saw it touch the outer band, fall off of it, come back and touch the outer band, but then it still falls back down, but stays above the moving average, tries to reach that outer band again and gets rejected, and then falls below the moving average. It recovers and tries again to reach that upper band, but can't get anywhere near it, and then falls below that moving average, which gives us a very strong sell signal, and then rides the band all the way down this way. So we could have gotten some beautiful entry signals, and we could have gotten a lot of pips. Again, it bounces off that band, but we would have stayed in this sell point until it crossed above that moving average. So we would have gotten in here and gotten out here, which is a nice profit. But all of this is just simply using Bollinger Bands. If we combined it with support and resistance levels, and we combined it with maybe RSI and volume, we would have been assured that these signals were safe for us to be trading. So remember with Bollinger Bands, let's not freak out. You don't have to do anything to calculate anything. You just simply put them on your charts, and they will lay out there for you to do as you want. So let me pop up for you. I put together a series of slides, and it's also in your handout, showing you a very simple, sweet way to trade Bollinger Bands. So I'm going to run this up there and watch. There's no audio, and And on the bottom of each slide, it gives you the step-by-step instructions. You can also find this at that link I gave you. So just read the screens as we move through this. It's very, very short, but it's a whole setup for trading or adding Bollinger Bands into your trading and actually trading directly from. So as I said, it's just a series of slides that have been set up for you to follow along this strategy. It's in your handout, and it's also available to you at that link. I'm going to run it for you one more time because it's fairly short, but it gives you a very, very easy way to incorporate Bollinger Bands into your everyday trading. So successful day trading is mostly a game of pennies. The best firms and individual traders who day trade look to scalp for small amounts. Using Bollinger Bands and the Bollinger Bands percent B or Bollinger Bands width shows that intraday trade edges do exist. Bollinger Bands and the percent B component of the Bollinger Bands have a very large quantified edge when you apply them systematically. There's a preciseness here using Bollinger Bands in this way. Using this preciseness to your advantage, or use this preciseness to your advantage. Now, we explained to you in the little presentation the strategy. Keep an eye on the bands and look for opportunities to trade. Now, as you can see, the Bollinger Bands are multifaceted trading indicators that can provide you with lots of information about trends, buy and sell balances, and about potential trend shifts. Together with moving averages RSI, Bollinger Bands make for a great foundation for any trading strategy. So that's it for us tonight. Now, I'm going to give you a second to click on those download buttons to download the Introduction to Technical Analysis, which is a very, very good ebook from investing.com that covers RSI, stochastics, MACD, as well as Bollinger Bands, and a lot more about technical analysis. And then the guide that I put together for you, the what's and how's of Bollinger Bands, that goes over everything we discussed in class tonight, but with more detail that you can read step by step and watch and the charts that are incorporated in there so that you have a better foundation. So hopefully you've downloaded those. Thank you very much. You've got the link to go watch those presentations, or like I said before, you can use the link you used to come to tonight's class to see the entire presentation. So have a very good night now. Thank you for supporting Alvexo. And if you go to www.alvexo.com and go to their education section, you can read a lot more about Bollinger Bands and learn how to use them in your trading. So have a wonderful night. Thank you for supporting Alvexo. and investing.com. And hopefully you've learned a little bit this evening. Have a good night now, and we'll talk to you again real soon.